What are you looking for from CPI in the United States tomorrow?
So I have no reason to have a different forecast from the consensus of 0.5 and 0.7 month on month. But what worries me, John, and you're not going to like this because it's looking forward, the June month on month print will be worse than the May month on month print. I think those who boldly said inflation has peaked and it's coming down may have to change their minds. I wouldn't surprise me if we see a headline print that's much higher than the 8.5.
Next month, Mohamed, why?
Not as early as next month, because first, the drivers of inflation are broadening, and that's due to the Fed policy mistake. Secondly, at the headline level, energy prices are going up month on month quite dramatically. And thirdly, we're seeing pressure on shelter and food. So if you look at all the components, it's way too early, unfortunately, to say that inflation has peaked. I hope it has, but it would not surprise me if we go above 8.5% on a yearly basis.
Hey, Mohamed, this is really important. I remember when you gave me the call last year, early last year, and you said, I don't think this is transitory. This is important. I'm pushing back. And you went out there in force, and that force got more powerful as the year progressed. I get the feeling this year, Mohamed, that we still haven't totally relinquished this idea that a lot of this is temporary. I hear from a lot of guests who think that we've seen the peak, a mechanical peak year over year, and for good reason, and they think the Fed backs away in September. Are you stressing this is going to persist through the whole of this year, that we're not going to get that drop-off that so many people are hoping for, looking for?
John, if we get a drop-off, we'll get it for the wrong reason. We'll get it because of demand destruction, and that would be tragic. The last thing we need is for inflation to completely undermine the demand side, because then we have not only a price issue, but we have an income issue. And once again, it will be the most vulnerable segments of the population that get hit the hardest. So in a way, be careful what you wish for. So if you believe the labor market stays strong, wages remain buoyant and start catching up to inflation, then it's very hard to see inflation coming down. If, however, you think that we're going to have a recession, sure, inflation is going to come down, but that's not the sort of transitory inflation that anybody wants.
Can you take any confidence from the labour market prints we've had recently, Mohamed, that we've seen robust jobs growth, yet we haven't seen unemployment come lower, we haven't seen wages accelerate? Can you take any confidence? Is there any sign whatsoever that we are slowly getting the supply side response that can alleviate some of this pressure?
Yeah, I certainly do. To be clear, recession is not my baseline. You've heard me say over and over again, it's stagflation is my baseline and recession is my risk scenario. John, the only thing I wish for on the labor market side is higher labor force participation and higher wages, believe it or not. That's the only thing that's missing. Otherwise, this labor market is very strong.
So when we wake up in September, we've had 3 more inflation prints going through the summer, and they sit down at the end of September, the Federal Reserve, Jackson Hole's behind us, all of that, Mohamed. What do you think the Fed has to confront, and how do you expect them to confront it?
I suspect first they'll be happy that most of the blame will have gone to the administration, unfairly so. You know, when I look at the mistakes made or the drivers of inflation, the administration comes 5th. However, it is the administration that's going to be blamed. So I think there'll be some relief in the Fed that people won't quite understand how much of this is a Fed policy mistake. But second, they're going to have to be much clearer about their path. And you've heard me say this, much clearer about what mistake are they willing to underwrite. Because right now, they are so late, John, that there is no first best policy response. That was last year when you and I were discussing it. Now, it's about minimizing the mistake. And they're going to have to make a choice and stick to it. The worst thing is a flip-flopping Fed. A Fed that hikes rates and then pauses in September, then starts hiking again and then pauses again. That would just mean that stagflation would persist much longer than it needs to.